Hello everyone, this is Professor Mihir Shah, and in this video we are going to learn about piecemeal distribution. Okay, now let us try to understand what is piecemeal distribution with the help of the following example. Let us say one fine day, three people, Mr. A, Mr. B and Mr. C, come upon and agree to start a partnership firm. Now, in order to start the partnership firm, Mr. A, Mr. B and Mr. C, they borrowed money from various sources. They took the money from accounts payables, they took the money from bank, and they also invested their own capital. Okay, after borrowing all the money, they started off their partnership firm. However, after 1 year, they came to know that their entire business was in loss. They agreed to still continue it for another year. However, consecutively, couple of years went by and they suffered heavy losses. So they came to a point where they decided that the business should shut down right away. So they went into dissolution. However, there is one big problem. Since the partners had borrowed money from various sources, they have a lot of liabilities that has to be still paid off before shutting down the company. So here what they decided is that they will start selling off part by part their assets, and whatever amount is realized by selling those part of asset, they will use that realized amount to clear one by one their liabilities. So in this case, the first part whatever they would have realized, they would use that to pay out all the government dues. Thereafter they would have paid the bank loans, the account payable, and if at all there is still any amount available after dissolving the entire company, then the last people to get the amount will be the partners. So in short, to sum this entire example, we can say that as and when money is received from sale of assets, it is used to pay liabilities. So since the assets are realized, whatever amount you get from selling your asset, that will be used to pay out liabilities. The liabilities are also paid in stages or gradually, so they are not paid at once. The money in short is distributed piecemeal, that is in stages and not in a single shot. So the entire amount is not paid on the spot. Okay, they will be paid part by part, and this is known as piecemeal distribution. So the very first thing that we learned is that in piecemeal distribution, amount is paid to the liabilities in part. Now the next thing that we need to learn is what is the order of payment of liabilities. Since the company has many liabilities, so the order of payment that we should remember is: number one, always pay government dues. Second, pay bank loan which is secured. Third, pay all your account payables, which includes creditors, bills payable, and unsecured loan. And lastly, if there is any amount available, then pay off the partner's capital. Now let us try to understand what are the various steps for solving a sum based on piecemeal distribution. Now the sum will be solved in 3 stages. Number one, we'll have to first create a statement of excess capital. Second, we'll have to create order of payment. Third, we have to create statement of distribution of cash. Now let us try understanding what do you mean by statement of excess capital and statement of distribution of cash. This is the format of statement of excess capital. Now the question arises, what is statement of excess capital and why do we prepare it? Now in simple terms, statement of excess capital is nothing but when we said the last people to pay off is the partner's capital. However, there are 3 partners. So which partner will get what amount and when will he get it? To find out that, statement of excess capital is prepared. Now to keep it again very simple, we need to remember 11 steps. The entire statement will be solved as per these 11 steps. Now to understand this much in detail, we will take this format again in the later half of the video where we'll be using it in the actual sum. So at present you just have to remember the columns, that is the steps. We have 11 steps, particulars, formula, and thereafter we will be including the data of the partners. In this case it will be A, B and C. The next format that we have to remember is statement of distribution of cash. As we have already learned in the introduction, piecemeal distribution nothing but as and when cash is realized, okay, it will be used to pay out liabilities. So this is nothing but statement of distribution of cash. So here the columns you have to remember will be date, particulars, amount, and thereafter the liabilities that we need to pay, and these liabilities differ from sum to sum. Okay, now let us try to understand piecemeal distribution with the help of the following problem sum. The question states that A, B, C are partners sharing in the ratio 2:1:1. They decide to dissolve the partnership firm. They are given us the liabilities and the assets. Under liabilities, we have the capital of A, B, and C and creditors. Under asset, we have premises, cash, and machinery. Thereafter, they are given as an adjustment that the realization expense amounted to rupees 1000 and the assets were realized as follows. First realization was of 60,000 and the second realization was of 20,000. And lastly, it has been stated that prepare statement of excess capital and statement of distribution of cash. Okay, now number 1, statement of excess capital. Now let us see how to solve statement of excess capital. The format has been created. We have 11 steps that we need to solve. Okay, so we'll start solving it one by one. Step number 1 states that PSR or profit sharing ratio. The formula state it will be given. So we'll look into a question. We have been given the ratio as 2:1:1. So we'll note down 2:1:1. Step number 1 was PSR that we have noted. Step number 2 states capital balances. Now A, B and C, the capital balance is given in the question as 50,000, 40,000 and 23,000 that we have noted down. Add GR, that is nothing but general reserve. Now in this question there is no general reserve given, so we'll ignore it. So adjusted capital balance will be same as the capital balance, which is 50,000, 40,000 and 23,000. Step number 3 states unit capital, which is nothing but step number 2 divided by step number 1. Now step number 2 ka total is 50,000 divided by step number 1, that is PSR, which is 2. So 50,000 divided by 2 will give us 25,000. 40,000 divided by 1 is 40,000 and 23,000 divided by 1 is 23,000. Step number 4 is base capital, which is always the lowest in step number 3. So the amount lowest in step number 3 is 23,000. So we'll note down here 23,000. See that you don't note down it in any other column, it just has to be kept aside. Step number 5 is proportionate capital, which is step number 4 multiplied by step number 1. That is nothing but base capital multiplied by the PSR. So 23,000 into 2, which is 46,000. 23,000 into 1, which is 23,000, and again 23,000 into 1, which is 23,000. Step number 6 is excess capital, which is step number 2 minus step number 5. So step number 2 is 50,000 minus step number 5, that is 46,000. So we'll get the total as 4,000. 40,000 minus 23,000 will give us 17,000, and 23,000 minus 23,000 will give us nil. Now this is one very important point to be noted down. Under statement of excess capital, at step number 6, one of the partners' capital has to become nil. So now we'll continue with the ahead steps. Step number 7 is PSR. Now only A and B is available because C is nil. So we'll just note down for A and B. So the ratio is 2:1. For the C column, we'll just note it as nil. New unit capital is step number 6 divided by step number 7. 4,000 divided by 2 is 2,000. 17,000 divided by 1 is 17,000. Step number 9 is new base capital, which is the lowest value in step number 8, which is again 2,000. So we'll note down 2,000. Step number 10, we have new proportionate capital, which is step number 9 into step number 7. So 2000 into 2 is 4000 and 2000 into 1 is 2000. Final step, that is step number 11, that is the final excess capital, is step number 6 minus step number 10. So 4000 minus 4000 is nil and 17,000 minus 2000 is 15,000. So with this, we have completed the statement of excess capital. Remember, at step number 6, one of the partner has to become nil, and at step number 11, again one more partner has to become nil. Okay, now with the help of the statement of excess capital, we'll be able to find the second step, that is to find the order of payment of excess capital. Now in order to find that, always start from step number 11. Step number 11 states that Mr. B is supposed to get 15,000. So we'll note down under order of payment. First pay Mr. B 15,000. So always start from step number 11. Then jump on to step number 10. Under step number 10, we have been given that Mr. A and Mr. B both have to be paid 4,000 and 2,000 respectively. So we'll note down under order of payment of excess capital. Second, pay A and B rupees 4,000 and 2,000 respectively. And third order of payment of excess capital is always fixed, that is to pay all the partners in the PSR. So for order of payment of excess capital, first pay step number 11, then pay step number 10, and lastly pay step number 1, that is as per the PSR. Now let us see how this is useful in creating a last step, that is to create statement of distribution of cash. Now if you look at the format, we have steps, particulars, amount, and thereafter we have arranged the liabilities in the order of payment. So according to the sum, the first order of payment which was available for liabilities was the creditors. Thereafter we had partners A, B and C. Now let us see how to solve statement of distribution of cash. Step number 1 will always be that we need to note down the balances. Balances of amount. Amount is nothing but the cash or bank which was available with the company. So according to the company, they have given us on the asset side cash 3,000. So we can note down in the amount column 3,000. The balance for creditors is 30,000 and the balance of A, B and C is nothing but 50,000, 40,000 and 23,000. So we'll note down all the values. So we have cash amount 3,000, creditors 30,000, and thereafter the capital balances of A, B and C. Now according to the definition, as and when you have money available with you, we'll have to start paying out one by one the liability as per the order of payment. But before that, we'll just go through the adjustment. Now adjustment had stated us that the realization expenses amounted to rupees 1,000. Always remember, the very first expense that you need to pay off is your realization expense. Thereafter start with the order of payment of liabilities. So first we have to clear out 1,000 of realization expense. So we'll first note down, come to our balance part. Do we have 1,000 available? Yes, we have 3,000. So we can clearly pay off the realization expense. So we'll note down less pay realization expense amount of 1,000. So from 3,000 we are paying 1,000. So the balance what we have is 2,000 still with us. Now the rule is very simple. Just one single rule that we have to keep in mind. As and when you have money, start paying them off one by one. So we have 2,000. The first person that we need to pay this 2,000 is to the creditors. Till we don't clear out creditors, we cannot go ahead. So we'll note down here, less pay creditors an amount of 2,000. So 2,000 will be deducted from amount and 2,000 will be deducted from creditors. So the balance now what we have is, in amount we have nil and creditors still 28,000 is pending. Now we don't have any amount with us. So when the amount becomes nil, we'll jump out to the realization value. The assets were realized, the first realization amounted to 60,000. So we'll note down here, first realization amount 60,000. Now we have 60,000 with us. So now with this we can start paying out one by one liability. So the very first thing that we need to still pay is the creditors. Creditors balance is still 28,000. We have sufficient amount to clear that. So less pay creditors 28,000. So the balance now what we'll have is 60,000 minus 28,000, which is 32,000, and the creditors have been cleared. So all the outside liability has been cleared. So now amount is still available with us. So now we have to start paying out the internal partners. But in what ratio? Here we cannot pay them in the profit sharing ratio, but we'll have to pay them as per the order of payment of excess capital. This is where this thing comes into picture. As per the order of payment of excess capital, we need to first pay B rupees 15,000. Do we have 15,000 with us? Yes, we have 32,000, so we can clearly and easily pay off Mr. B's 15,000. But before that, we'll just bring the balances of A, B and C down. Okay, so now let us pay 15,000 to B. So we'll add let's pay B 15,000. So 15,000 will be deducted from the balance as well as from the balance of Mr. B. So the balance which is pending is now 17,000, 50,000, 25,000 and 23,000. We have here cleared the first order of payment. We still have amount available with us. So now let us see what is the second payment of order. The second order of payment states that we need to pay A and B amount of 4,000 and 2,000 respectively. In total we have to pay 6,000. Yes, we have sufficient amount, so we can clear this order of payment also. So here we'll note down let's pay A and B a total amount of 6,000, from which 4,000 will be paid to A and 2,000 will be paid to B. So we'll subtract it and we'll get the balance as 11,000, 46,000, 23,000 and 23,000. Now a key point to be remembered: once you clear out your second order of payment, whatever balance is available with you all, always check that those balance will have to match to your PSR. So if we try reducing 46,000, 23,000 and 23,000, we'll get in a ratio of 2:1:1, which is matching with our original PSR, which is 2:1:1. So with this step you can figure out whether your sum is right or wrong. If you get this ratio right, 100% your sum will be correct. Now let us further solve it. We have cleared the first order of payment, we have cleared the second order of payment. Now lastly, if amount available, then we'll have to start paying all the three partners in the PSR. We have already cleared the outside liabilities. We have started paying off the order of payment, the first order and second order. We have still amount available with us. So now whatever amount will be available, we'll start distributing them to all the three partners in the PSR. So we'll note down let's pay A, B and C in PSR. Entire 11,000 will be distributed in the ratio. So here the ratio will come up to 5,500, 2,750, 2,750. After subtracting this, the balance which will be available will be nil for the amount, and for the capital balance it will be 40,500, 20,250 and 20,250. Now amount has become nil. We'll again go back to the realization. We have one more realization which is 20,000, so we'll note down here. Second realization 20,000. Now we have already cleared outside liability, we have already cleared the first and the second order of payment. So now whatever amount is available, we'll have to distribute among the partners in the PSR. So this next step will be let's pay A, B, C in PSR. The entire 20,000 will be distributed in the ratio 2:1:1, so which comes up to 10,000, 5,000 and 5,000. After subtracting this, the balance which you will be getting will be known as, the final balance will be known as, since the balance is in positive, the balance will be known as loss on dissolution, and the loss on dissolution amounts to 30,500, 15,250 and 15,250. Though the amounts are in positive, we are still called a loss since the capital invested by the partners are much more than the amount that they have got by dissolving their firm. So whatever is the final balance, if the balances are in positive, it will be known as loss on dissolution. If the amount comes into negative, it will be profit on dissolution. Now one last thing that we need to note down is the final answer, whatever you get, try reducing it and see that if it matches with your PSR. In this case 30,500, 15,250 and 15,250, if you reduce it, yes, it is matching with the PSR, which is 2:1:1. So your final answer should match with your PSR. So with this, the problem sum based on piecemeal distribution comes to an end. Thank you.